Good morning, traders. It's Monday, February the 3rd. Taking a look at the charts, we got the daily chart of the SP 500 futures, and more or less the market has been bouncing up the 20-day moving average. We saw a bounce here. We got another kind of bounce here where big sell-off, the news hit. We got big recovery, and then we came back and we tested it last week 3 times, and then we broke through it on Friday with more or less a washout sell-off in the morning or all session. Late in the day, we closed at panic selling level again. The market down here, short-term and momentum cycles bottomed out, just like we saw over here when the market put in a bounce. So we are getting a bounce today, simply oversold, moved too far too fast, but we've got a bear flag here. Looks like it's more or less had a measured move, but it could continue to form multiple bear flags. We'll see how price goes, or we could get into some type of waterfall sell-off, a much deeper correction, depending on how the market wants to go. And of course, if we break this middle area here, if the market comes up and puts in some type of, you could argue an inverse head and shoulders, some type of basing formation and break to the upside, we could start to see it run higher again. So at this point, though, when we look at the market, we've got our pink cycle here. We've broken down below this red line. We are now technically down in a downtrend. We're making lower lows, lower highs, and we'll see if the market is going to sell off. If you look over at our trend analysis, we've gone from the market rallying, started to get oversold, and then it bounced from an oversold territory, and we got into more or less the momentum shifted. We got orange bars, and now we're down into red bars. And that means we're now in a downtrend, and the odds are price is going to continue to be sold into. So we are in position for that. Lower prices or even a sideways market should send bond prices higher. And that's what we've seen a lot over the last few years. Every time the market sells off or trades sideways here, we actually see bonds really pick up speed near the later end of these moves. So as the stock market sold off in 4 days and then traded sideways for almost a month, bonds actually rallied this whole time in a big way while the stock market went sideways. And that's what could very likely happen again here, where there's fear in the market. Maybe the SP 500 holds up and trades sideways, builds another platform for it to potentially go much higher, but bonds should continue to rise and climb as that fear and this kind of indecision in the market continues to go sideways. Now, if we take a look over at bonds, they're down 0.25% this morning. You can see we've had these series of rally, consolidation, rally, consolidation, rally. In the grand scheme of things, we've got a huge rally up and a huge bull flag. We got the breakout. It's starting to run higher, and obviously we've got some pretty good momentum. We're still holding above this 5-day moving average, which is this blue line here. We've broken several previous pivot highs in the market, so we've got nice momentum to the upside, but it is looking primed and ready for some type of pullback or pause because it's gone pretty far pretty quickly, and we'll see how the market consolidates over the next little bit. Obviously, if the stock market continues to sell off, if we get panic selling, we could see bonds really continue to blast up here and potentially break this high or test this high or even go higher. But if it does just continue to rocket straight up, we got to be aware what goes straight up, like we saw over here, usually comes straight back down. So we've come in, we've locked in about 3.5% on a portion of it. We're going to let it continue to run up till it hits our next targets, and we'll just play it by ear from there. Looking over at precious metals, gold down 0.3% today. It gapped higher at the open in overnight trading. It's selling back down. We are holding above the 5-day moving average. If we look at silver, it's down 1.3%, which is it's always a little more volatile, kind of a little bit more messy of a chart. It's had a big drop lately, a big pop again, but overall, it's in a big bull flag formation like bonds. It has popped to the upside. It's flagging out. Again, building some type of potential base here for it to break out and go much higher. If we look over at gold miners, they are set to gap lower as well. We're going to continue to see this was a big bull flag, started to break to the upside, tested these recent highs. It's consolidating, and hopefully we'll see price hold up and then break to the upside going forward. But at this point, it is still struggling to break out, and there is this potential that it's going to have an ABC correction. So we've got this move down, we've got this bear flag channel here, and if we were to take the measured move, more or less we'd be looking at a move down around this 38, maybe a little bit lower potentially, depending how the market moves. So there is potential for this to pull back and still consolidate for a while. Hopefully it'll hold up in this range here and actually build this platform for it to break out and run, so we don't have to sit through any drawdown over here. Looking over at energies, natural gas up 1.7% this morning. We're still hanging in there with our UNG. We got into this panic sell-off, this washout low, and there just continues to be more selling pressure, and it's getting long in the teeth. I think it's primed and ready for a knee-jerk reaction. The markets always have a way of dragging things out longer than you expect. Even when you get a setup, sometimes it just drags out. The last two setups played out actually very quickly. This one here is very long, prolonged, and it should make for a great knee-jerk reaction. The question is, do we get stopped out before it has a knee-jerk reaction? There's a lot of selling going on here. Huge, I think, short selling, and eventually I think there's going to be a rip your face off type rally in natural gas. I think we're getting close. We're starting to get a little bit of a momentum. If we look at the shorter term chart here of the cycles down at the bottom, you can see here our momentum cycle has pushed up. You can see the high was here, we had another higher here, we had a higher high here in cycles. So we do have short-term cycles. Our momentum is pushing to the upside. We're getting some divergence there, and that's a sign that the market's getting primed and ready. We kind of saw that over here as well. We had a momentum cycle, a higher momentum cycle, another higher one. The market like popped and really took off again. And so hopefully we'll start to see that. So we're still struggling here with our major cycles to the downside. Maybe we should have just waited for the market to form a reversal and get in versus try to pick a bottom. But overall, it was primed and ready. We've tagged our key levels, and we're underwater here as it's flirting at these really significant long-term support levels. But hopefully we'll start to see a big recovery in price and for the start to rocket to the upside. Looking over at crude oil, it is relatively flat on the session, but we are testing these significant lows on the charts. We are down at this 51, 53, or 52 area. This is the level we've been talking about. Back up here, we talked about it, how this news-based pop that goes straight up into resistance. It fizzled right back out, and then we had this really wild grind higher where massive sell-offs followed by huge rallies. It's because it's really tough to trade. Don't really want to take on something when it's got 5.5% drop one day and 5.5% rally the next day. A little bit too much of a wild card. But we got back up into this upper resistance zone. A lot of it based around news again, and then we've seen it come all the way down to our downside target. And now you can see we're starting to get some chop here. It's grinding out. We'll see if it's going to have a knee-jerk reaction or some type of basing pattern. But if we start to break below this level, the next level I think is 44, and then below that is 33. So crude could get into a pretty ugly situation here, depending how things go. If you look at this pattern, let's go right back, further back here. Overall, this pattern, when you look at it, right here we've got this move down, and then you've got this consolidation. You've come back down for a potential double bottom right across here. If it breaks that level, then we're looking for it to come down. It was 26, around the 26.50. This level right back here where we hit this measured move before, it could come right back down into this area. So this is a huge potential bear flag that is starting to break down. Of course, price is testing right here, right now. And from here it goes to 44 and then potentially down to 26. So we'll see how things start to shake out, but it is testing long-term support right here. And I wouldn't be surprised if we get some type of bounce, but if it fails, things could get ugly really quick. Last but not least, let's take a quick look at the US dollar. US dollar index, we zoom in here. Overall, it is in a corrective phase. In the grand scheme of things, the big trend is still up. We're still making significant, the standout lows here are still higher each time. Now we're starting to get right down to this level here where it is testing a really critical level here. If this starts to sell off and break down, that would spark most likely a big rally in precious metals, and this could unwind in a fairly big way Obviously, falling dollar will spark precious metals to rally. And more or less, I think the dollar is testing short-term resistance here. Had a big move down, and now it's recoiled back up here. If it starts to sell off, and especially if it breaks this low, then I think the metals market is going to kick into high gear and take over, and we'll see the precious metals outperform the stock market, and that could be the early warning sign that the end is near for the equities market, which is what we've been expecting for a while. We just haven't seen the miners really take off and lead the way as much as they should yet, but I think we're getting close to that point. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.